Hi, everyone. Welcome back to FOW Asia. Thank you, TK and Luis, for sharing your views on the fintech innovation in the derivative market in the fireside chat earlier. So next comes our final panel discussion of the day on digital assets, blockchain, and marketplace. What's next in play? Moderating the panel, I'm delighted to welcome Eric Newsay, a co-founder and group director of RF International Holdings. Eric has over 20 years of combined experience across capital markets, entrepreneurship, and fintech. To discuss this exciting topic, Eric is joined by our panelists with diversified experiences from Hobby Tech, Tower Research Capital, Hong Kong International Family Office Association, GFM Asset Management, and Synthnum. We also encourage you to ask questions throughout the session via the Q&A function on your screen. Every session is being recorded and will be available on demand. So now I'd like to hand over to Eric to get the panel started. Eric, over to you.
Thank you, Joy. Good afternoon, everyone, and esteemed speakers. Welcome to FOW Asia's last panel, and I would imagine it would be the most exciting panel to end off the good day. So to start off, I'd like to take a brief moment to have our esteemed and distinguished speakers to say something about what they do that would set the tone for this particular exciting panel. So to start off, may I have Lily from Hobby to share something about her experience and what she does. Lily, over to you.
Hello, everyone. Very happy to be here. I'm Lily from Hobby Tech. I'm the CFO of Hobby Tech, also the CFO of Hobby Group. Yeah, our Hobby Tech is a leading virtual assets company in Hong Kong. Actually, we have got the license 4 and 9 for virtual assets management, and also the trust license for our custody company. We also got some virtual assets license, such as US Nevada license for custody. So now we are providing one-stop virtual assets solution to our institution and also retail customers. Also, Hobby Group is one of the largest exchanges in the world, especially providing some crypto exchanges, crypto tradings. We have almost all traders, over 20 million traders on our platform. We are one of the most popular one in the world. That's what we are doing now. Thank you.
Great, thank you, Lily. Moving on, I'd like to introduce Shunyet from Tower Research Capital. So over to you, Shunyet.
Thank you very much, Eric. So I'm the head of China and the Asia co-head of Tower Research Capital. We are a New York headquartered firm. We're a global market maker and liquidity provider that trades on 150 exchanges globally. And recently, about 4 years ago, our firm has moved into trading in various CEXs and is now a very important market for us and a place to provide liquidity.
Thank you, Shunyet. And over to Chun Lu from Hong Kong.
Hello, everybody. Thanks for having me here. I'm Chun. I'm the Distinguished Advisor for Hong Kong International FOW Association. At the same time, I'm the Chief Economist of mainland, actually Shenzhen-based AI firm. It's called Mushroom AI. Mushroom AI is a new generation asset management firm. We're using some AI technology plus quantitative trading technology to do the FOW, fund of fund, sort of like the second layer asset management. Before that, I used to be American trader. I did the day trading, like I traded 4,000 stocks with futures options. That's in the classical finance world. Then I swing back to Hong Kong, work for the PwC, doing the risk consultation business. Then I moved to Shenzhen, work for Ping An. They have a hedge fund branch. I'm there. I used to be their CRO. They have both the OTC business and arbitrage trading business over there. Thanks.
Great, thank you, Chun-Yen. And next we'll have Tariq from Singapore.
Thank you, Eric. I'm actually in Hong Kong as well.
Oh, sorry.
but no problem. So I run GF.
What color are you here? Sorry, go ahead.
I run GFM Asset Management. So we are a Type 9 licensed wealth management firm, and we also run a U.S. registered investment advisor firm with the SEC in the U.S. Our initial specialty was actually helping Americans who invest internationally, who may live outside or have some kind of U.S. footprint, but right now only about 30% of our clients are US persons or have any form of US connection. But generally we work with families, couples, trusts, retirement plans that have money in more than one country and are looking for rates of return, looking for tax efficient ways of earning, between 4%, 8% or so on quite steadily because they need to generate income in a low interest rate environment. And we've started looking at digital assets in part because clients had asked about them and we want to make sure that we give them very informed replies on it, but also because I believe DeFi is a very, very nascent space where a lot of the things we do right now through centralized financial institutions can be programmed on smart contracts and hopefully will be doable better, faster, cheaper than we've ever been able to do before. So.
Thanks, Tariq. And last but not least, we have Roland, and yes, he is in Singapore. Over to you, Roland.
Yes, I'm Roland, and thank you for having me on the panel here. I'm with Signum. Signum is a digital asset group with a banking license in Switzerland and a fund management license here in Singapore. So we are digital asset specialists serving crypto assets, but also tokenized assets. My background is traditional exchanges. I also served more than half of my lifetime with one of the largest exchanges in the world, being the regional head for the derivatives markets for Eurex for many years. I still have a foot in the industry. I still serve on the board of the Muscat Stock Exchange in Oman. But also personally, I have been invested into crypto assets since 2015.
Great, thank you, Roland. So now let's start the exciting part, which is the main part of the panel. So to begin with, we have three basically main themes or main topics. One is regulatory trend, second, demand in the virtual asset, and the last one, which is the development and innovation. So starting with the regulatory trend, we'd like to have the first question is, what is the regulatory trend of the virtual asset and the crypto world? To start off, KPMG has a definition where it says a digital representation of value that can be digitally traded or transferred and can be used for payment or investment purposes. So examples of your cryptocurrencies or asset-backed tokens, or generally classified as securities by financial regulation. So on this part of the question, I'd like to have Lily from her experience, vast experience from Huobi and Huobi Global, to basically share what is the trend out there from an exchange perspective. Lily, over to you.
Thank you. Actually, for a very long player in this industry, regulation is very important to us. We believe the regulation is a very important trend for this whole industry. Generally speaking, there are for different countries, there are quite different regulations, but the regulation can be divided to three different parts, three different regions. First one, United States, and then Europe, and then Asian market. For United States, most people know this market is one of the most open market in the world. The total market is quite open to this industry. It encourages innovation. So today, most of the new innovation projects come from the United States. Sometimes usually come from Silicon Valley and sometimes from Wall Street. And many developers are based in the different states in the United States, almost everywhere. When I come to visit the United States, I can meet many developers in different states, maybe over 10 states. That's very, very encouraging, because you can see this very exciting industry happening in this country, but also there are many voices in this country. Recently SEC have some comments about Coinbase. They want to have some issue about their lending business. Yeah, but this is just a different voice. I think, generally speaking, the United States is the most encouraged one. And another one for Europe, many people have talked about that. Then today they encourage something about maybe some banks to join this industry, but the regulation there usually will follow the United States market. Another one for Asian market is quite different. For example, Japan, Korea, Singapore, Hong Kong, they all have different regulations. Japan is the first one, but they need to want to be very strict. And Singapore is trying to be open today, but Chinese government, they try to be very negative toward this industry. Today, totally speaking, Asian market is something maybe not so positive or not so advanced in this industry. We think many Asian countries that today trying to learning more from United States and Europe today. So that's what we are seeing, what we can see in the market today. Thank you.
Great, thanks, Lee, for the very vast spectrum of what you guys see from a regulatory trend. It seems that again, US is leading, followed by Europe, and I think the Asia nuances being so fragmented, in different aspects, it does cause certain, I would say, obstacles or challenges to operate in. So this leads on to the next question, which is how does the corporates and the FOs are responding to this, particularly in Asia, of the regulatory trend or landscape? So maybe from a start, I'd like to pick the brains of Shunyet from a proprietary trading world of Tower Research that's based in China. How do you guys maneuver or respond to the vast changing regulatory landscape?
Well, first off, I want to say we're not based in China. I'm currently in China now, but we do all of our crypto trading in licensed places like Singapore.
Tower is also our client.
Yes.
Okay.
So I want to start off and say an interesting thing. First off, you need to differentiate between the different types of corporates, right? You have US listed companies like MicroStrategy and Tesla that hold crypto assets on their balance sheet, right? You have fund structures like Grayscale, right? And you also have lots and lots of hedge funds and PE companies that are now interested in coins and projects, right? And all these guys want regulation. They actually want to embrace regulation, and they want that regulation to be clear, right? So, we are a little bit different. We are a market maker. We go to where liquidity is located, right? If there's liquidity in the US, if there's Coinbase, we'll trade there. Liquidity on Huobi, we'll trade on Huobi. But we do have one thing that we have to deal with, is that we want to make sure that our counterparties and the exchange itself has very strong KYC and AML practices. So actually, in that case, we also embrace regulation, because if we trade in Japanese exchange, a Korean exchange, or a US exchange, we know they're regulated. We know that we don't have any of those KYC, ML issues. So we feel very comfortable. Other exchanges, we don't have the same comfort. And it takes us time to do the onboarding. It takes us time to sort of do the proper due diligence before we onboard them. Now, so like I said, we love regulation, but a lot of it stifles innovation. So CME has, crypto futures, but it doesn't trade 24 hours a day, which makes no sense. You need something that you could hedge. A spot market that's trading 24 hours a day, and you have a futures contract that stops. Right. So, and US exchanges can't offer derivative products yet. So you have Coinbase that can't offer derivatives. You have Upbit, which is a huge exchange in Korea, but they don't have any derivative products. So, you have the demand on the spot side, but you don't have any hedging instruments. So I think the regulators are still catching up on how to figure this out. And so a lot of times we're going to somewhere else to hedge. If we need to hedge our, Korean exposure, we go to Huobi Global to hedge our exposure, and then you don't get the benefit of cross margining. So we embrace regulation as long as the innovation also comes along with it, and we hope that that when the US actually rolls out the proper transparency and rules, that Asia follows the same thing, and without innovation disappearing. Thank you.
Thanks, Shunyet. So just to summarize, so what you're saying is that from a Tower Research kind of a profile, regulation tends to be more of the integrity of the venue that provided that you guys are trading in, not about your types of a KYC, AML, kind of a notion of regulation. So yeah, good point. So and moving on to Chen Lu from the family office space. How are you guys responding to these regulations? From what you see in your area.
Well, first of all, we will touch upon how the current landscape and the whole ambient environment are going to affect IFOs. I just want to come back a little bit briefly, touch upon where those IFOs are coming from. I think for the last 2 years, Chinese mainland IFO are burgeoning and mushrooming because by nature they are solely associated with ultra-rich elites. So the reason I'm saying that is if you look at their risk appetite, they're kind of like, by nature, they are very proactive in taking risks. Well, one of the demonstrable case for early this year will be a slew of those high-profile Hong Kong IPO, plus with Elon Musk's charismatic the screaming out for the digital asset market. So those IFOs are very eager to jump into this market. But since I think like late April, Chinese government has issued a slew of very stringent regulatory policies, and that kind of like a green to a halt is sending very severe warning signal, because here, I don't want to use like other words. It was like this environment is politicized. So everybody know politicized is to have a red line. Nobody wants to cross that. So at this juncture, this moment, everybody sees that type of a political risk. This is not about treating, P&L loss again. It's like, this is a pretty serious yes or no, process sort of like thing. The fall of the firm. So what they do currently, they just take a pretty cautious stance. They slow down. Actually, because of this stringent policy, a lot of those firms, including the Bitcoin mining and the trading services, I think Huobi probably experienced similar, restrictions or new requirement. Other firms decide to move overseas. So for the mainland, especially mainland-based IPOs, they really experience the technical difficulty to access this market, not only the political risk, the investment, and the technical barriers. So all the things together that pose a pretty big hindrance for them to access this digital market. At this time, they're still looking, and they take a cautious approach to see, what's going to be the next. As you guys know, today, there's a news issue, the Chinese government, they just summoned NetEase and Tencent to their office to talk about this video game thing. So, a lot of people believe, especially for the asset managers, because they manage a huge amount of money. So at this time, they're not talking about the returns. They're talking about, control the risk, to contain the political risk. So that's the top thing agenda on their the plan and the layout. So they want to do something, control the risk at this time. Thanks.
Great. Thanks, Chen, for sharing. It looks like a lot of things are, a lot of the IFOs are really concerned about the trend or the regulation trend in North Asia, I would say. And then hence, like you mentioned, to the extent of moving their operations to another venue or country that facilitates the thrive of the market. So with that in mind, regulation, I would say, has a part to play by the market players, people like yourselves, right, to shape the industry and perhaps also to give insights to the regulators that what's happening on the ground. So the question is, what could players in the industry do, especially big firms or unique firms like each one of you guys are in, to help shape the industry landscape? So perhaps I'll channel back to Lily, given that you guys are vastly all over the world. How do you guys help to shape the industry in that sense?
Yeah, very good question. Yeah, the crypto world today is developing so fast, but still in a very, very early stage. Maybe just like internet in 1990s. So I think most of the regulators today are still exploring on it. They have to take a look at it with concern. They know very few about this industry, so it have no doubts that many countries and regions will have their eyes on the regulation, and they want to learn what to do next. But for our company, as we are very important players and very early players in this industry, our group have founded by 2013, many years ago. We have to communicate very closely to many countries, many regulators, to help them to shape organized and regulated landscape. Especially, for example, when we are applying for a license for a 9 in SFC in Hong Kong, we got the approval for 100% investing in crypto assets, but they don't know so much about it. When we applying for this kind of this kind of license, we have to have many communication with them. Why people do not only use USD for asset management? Why they need to use, for example, USDT or USDC for their asset management? What's USDT and USDC, this kind of stable coin mean? So based on this kind of application in many different countries, in Japan, in Korea, in BVI, in Britain, we actually must do many communication to let regulators know what's happening in this industry. And of course, today we are still applying for many new products, especially in Asia region. As I mentioned, the regulators here maybe it's just something behind in United States or in Europe. So when we apply for new products, for custody, for asset management, we want to use BTC, we want to use some DeFi cryptos, we must have new communication. I think that will make the whole regulation no more and make many people, many other players, they can follow our way to do what they want to do. So this will do great benefit to the whole industry. That's what we are doing now.
Thank you, Lily, and I think that's a very tall order for the Huobi group as a whole. Now moving closer to home, Roland, you mentioned Signum, in Switzerland, it's market-leading licensed institution, financial institution, and then in Singapore, you guys have the MES Capital Market Services license for fund management. So on this part, working with MES, I guess through the licensing scheme and educating them what you guys want to do in Singapore, how do you help, or how do you play this part about collaborating with the regulators in terms of what you guys are doing and also innovating new products at the same time? Yeah, over to you, Roland.
Yes, it's very important to keep a ongoing dialogue with the regulators in every jurisdiction you're acting in. In particular, when you are a pioneer, you need at early stage engage with the regulators, also even discussing your future plans. In my previous job life, I obtained a couple of licenses in the region, including RMO here in Singapore, including a approved clearinghouse here in Singapore, and also a license in Korea and Taiwan and other countries. So now here we're entering a new space now, because there's for most of the applications around crypto assets, there is no regulation in most of the countries. So the regulators had this very challenging task to decide where to put cryptos. And some regulators are still struggling where to put cryptos. And you still see even law cases in US where they are still debating, is it security or not a security? And Singapore, for example, has decided to put crypto assets under the payment services, so treat it as payments, which provides a framework, a reliable framework. And I think this is the most important thing for a jurisdiction to provide, is a reliable and prudent framework where then you can also attract business, where you can lean on. So I think most importantly also for the industry players, coming back to your question, Eric, what is the most relevant thing to do for the players in the industry is to build a strong regulatory compliant fundament, and which is a challenge in some countries, as we have heard already. But it's not done with, let's say, going for an easy way out. What we have seen, for example, 2 to 3 years ago, where larger crypto institutions, including some of the larger exchanges, went for places, offshore places like Malta, Estonia, Lebanon, or Seychelles or Panama. It hasn't worked out. So you see the regulators now going after them because some of those platforms were offering their services to US citizens or to European citizens, and now you see now they get the call from the regulators. So it has played out. What has played out so far is a stable license and a stable jurisdictions, and that includes, for example, Switzerland. That includes Singapore, for example. So where you have something concrete to apply for, and you know the rules in what framework you're acting in. Without that, it's extremely challenging to grow business and also to attract a business. Another aspect is why regulators, of course, it's not easy for them to come up with regulation around digital assets, because a digital token can represent any asset. It can represent a gold bar, it can represent a coffee, it can represent iron ore, equity, debt, or even a piece of art. So, and most jurisdictions and financial regulations, different assets fall under different regulations. So in Japan, for example, you have a financial market regulation, then you have a commodities regulation, which was converging over time, but you still have many different regulations applying for different types of assets. But here everything is coming together. Everything is coming together, represented in a digital token where the underlying technology is exactly the same, and the token can represent anything. Another aspect is also that the blockchain technology and DLT technology allows us to trade, clear and settle, and send an asset to custody in one transaction. That is very different how most of the regulations are being set up. So many regulators have a framework where they regulate trading separately from settlement or clearing, separately from custody, separate from asset management, but the blockchain and DLT technology allows us to do everything at once, right? So we basically cross several sectors within a regulatory framework. And that makes it very challenging for the regulators to come up with a specific regulation for all these use cases.
I think that's a very good point about the asset classes coming together, because I mean, in Singapore, you see some intermediaries where if you're trading securities, you need to open a securities account. You want futures, you need to open a futures account, and then your liquidity, you can't, centralize it, right? Whereas blockchain basically eliminates the whole barrier. But then again, the regulation doesn't perhaps keep up, it hasn't kept up with the notion that. So thanks, Rona, for sharing your insights. And moving on to Tariq, being US centric and now also in Asia. How are you guys helping to or contributing to shape the industry?
Well, we take a very, very long view on where regulation has come and where it is going. I mean, certainly if I start from like first principles and what I expect regulation will ultimately be, the fact is a lot of crypto doesn't really need regulation. I think most people who are either trying to regulate it or thinking that it does need regulation don't really fully understand it. I often say, crypto and blockchain needs regulation the same way that email needs a post office. And if you think, for example, of how we're used to, in the US, for example, the US Postal Service is a state-owned enterprise. And so there are lots and lots of federal laws which govern mail delivery and which govern mail fraud and which govern, what forms of transportation postal workers can take and so forth like that. And the way a lot of these regulations feel to me right now, they feel like people are so used to the Postal Service that they feel the need to apply Postal Service type regulations, even though we figured out email. So kind of like Roland has mentioned, mail sorting and then mail delivery and then last mile putting it into a post box and then not taking mail out of someone's post box. There are federal laws covering all those things because with paper mail it makes sense. But the way that you make sure that Roland's not reading my email is that I keep my password safe and I don't I don't write it on my desk. Now, that said, the fact is there are people who want regulations. There are regulators who do feel it's their jurisdiction. And as a regulated firm, regulated in 2 jurisdictions, we always make sure we follow the rules. As Lily said, so far, the US is quite open, and we've never really seen a case where regulations have made any of the things we do with US clients any harder. I mean, in general, there are certain types of crypto assets the SEC considers securities, perhaps rightly. I mean, there are rules against mail fraud. And whether I commit mail fraud using paper mail or email, it's still fraud. And arguably, that's the reason that the regulation exists. The regulation is not really there to slow me down, is not really there to stop innovation. In the same way that I see in some jurisdictions, regulators who say, oh, they require approval for certain things, or they require X amount, in order to do this, those will look like the regulations that you've seen that have slowed things down. If you look, for example, why is it that real estate in Los Angeles is so expensive and public transportation is so crappy? The reason is there are regulations that require you to build a certain amount of parking around every building. Even though it doesn't make sense, the thing is the regulations are there that require that parking. And the result is everyone knows they have to buy a car because otherwise you can't get between 2 buildings. You'll always find a place to park, but then the bus will take forever because buses weren't really built for a culture where everybody has a car. What that's going to mean longer term is the places that are more like Los Angeles are going to get less and less crypto business because no one's going to want to do business there. And places that are more open and they say, well, we're going to have enough rules to prevent fraud, but we're not going to stand in the way and say that you have to do custody one way and transactions the other way. Then those are going to be the places that sponsor innovation. Longer term, I think people are going to want to see regulation encoded on the blockchain in the form of software so that no human regulator is in a position where some arbitrary position says you can't do A or you can do B and somebody doesn't know it ahead of time.
Right. Thanks, Tariq. And just to also take a step back from like what Shunyet mentioned about CME, I think the US CFTC, for example, has a lot of what we call market industry groups that they consult with, like for example, from the proprietary world, they have the DRWs and the likes. So they consult them, basically what makes sense, right? And I think that's something that the US has done well. And hopefully, within Asia, we do the same as well. Now, moving on to the next topic about the demand in this asset class, this virtual asset. So with the likes of El Salvador, trying to legalize Bitcoin, and then its rollout was a bit, not so smooth, and then that causes the market to tank for a bit. So we're seeing the interest in the virtual asset from an institutional investor space. The question is, what are their preferences and concerns? So maybe I'll again throw it back to go to Lily. That you mentioned that Shunyet is Tower Research is your client. So what are these institutional investors looking for, and what are their concerns? So over to you.
Yeah, of course. Every institutional investors, they look for money. they look for what's the next, what will happen next. Yeah, everyone wants money in the market, but yeah, no, that's not the only thing they're looking for. For this very new, very fast-growing industry, they have many concerns. Actually, at the very beginning, we talked so much about regulation in the first topic, but actually, at the very beginning of this industry, everything is regulated by technology, by coding, by the blockchain, the block and the chain. That's the very beginning. The regulation is about this. So for most institutions, they are not. They don't know so much about this kind of regulation, this kind of rule of this industry. So of course they have many concerns. For example, safety. What about my key? How to keep my key safety? For example, about KYC AML, as Tower said, yeah. If they don't have, if the exchange, they don't have very good KYC and AML, who is my trade, who I'm trading with? That's very unsafety. So, and of course, they have concern about, as mentioned before, for the securities, usually custody, banks and the trading, they're quite separated. But in the crypto world, maybe they're just combined together. So they want to know, oh, if there are any custody service to make my crypto very safe, to make my crypto quite different from exchange. There is an institution to keep my cryptos, another one to trade my cryptos. So they have many concerns. That's why FOW Tech today, we are providing a one-stop solution to this kind of concerns. We provide service like custody. If you want to buy something, buy crypto, you have concern about who you are trading with. So we have very strict ML and KYC process. And then we will have the custody service. You custody here, you can trade on another platform, another exchange. Yeah, today we are providing this kind of one-stop service to all institution customers. We want to make they become safe. Well, all of them have known this industry make money, but they just want their money, their crypto to be safe. That's the situation today. And I can share also many interesting things in this industry. For US market, yeah, I think many people have know Coinbase have a very large amount of institutional customers. About 20% US adults they have purchased crypto. That's incredible. For Asia, maybe even less than 5%. That's quite different. 1 year ago in Latin America, one of my friends told me he's a broker in Latin America. Maybe very limited, less than 5% people trading securities. They buy crypto. But today, over 50% of Latin America customers, they trading securities want to trade crypto, or they began to buy their crypto. So the demand in this market is quite incredible, especially in Asia. Everything is just the beginning. The percentage of institutions join this industry is not very high, as much as, for example, in Europe, in United States, even lower than some place in Latin America. So just to provide very good products, very innovation products to institution customers, they have this kind of demand.
Right. Thanks, Lily. And the rightful mention about emerging countries like Latin America that's coming up, or even Brazil, in terms of its interest in this asset space. So Tariq, over to you. In terms of what are preferences or concerns that you actually see with this increasing demand, even from GFM side of the fence?
Well, so we get clients who ask about digital assets all the time. They ask, oh, should I buy some Bitcoin? Should I buy some Ether? What do you think of NFTs? I mean, I wouldn't say so much concern. I mean, the thing is, we always approach things from a fairly informed point of view. If there's any concern I have, it's that a lot of digital assets we see right now don't really have economic substance. I mean, I've said Bitcoin really is nothing more than scarcity as a service. It's a way of burning a heck of a lot of energy because other members of the node don't trust each other. So I say it has zero fundamental value. If anything, it has network value. It's kind of a greater fool play more than anything else. If you ask me why large institutions get involved, it's not necessarily because they want to make money. It's because they're all agents. And they're always looking at what's the upside versus what's the downside. In which case do they lose their job? In which case do they get a bonus? That's how a lot of the institutional world runs. Whereas, several of our clients own, 1, 2 Bitcoin, or they own, own a few Ether here or there. And what we're looking for, the challenge we have, is finding digital assets that actually have economic substance. So, for example, if I'm looking at, say, a Uniswap token or an Aave token, the real question is, okay, how are we actually going to get a return on there? And how is that particular network, how is that particular token going to fend off any competition? And with any investment, you've got to look at it. I put $100 in. How am I going to get $200 out? And with a stock or with a piece of land or with a building, that's pretty straightforward. If I buy this building and I can count the rent payments coming in, it's pretty clear how I'm going to get $200 back for every $100 I put in. Many digital assets don't have that yet, and the one bit of concern is a lot of buyers of those digital assets don't seem to care. You ask my 10-year-old, my 13-year-old why they want to buy Dogecoin, they can't give you a good economic explanation. It's got meme value, but to me that's not sustainable. Now I could be wrong, and Dogecoin
it makes money, right? Yes.
Well, but it depends what you mean by makes money. So far, and this was a real interesting question. So far, crypto hasn't made most people any money. It's just helped transfer money from one place to another. If you buy Dogecoin at 25 cents and sell it to someone else at 50, no money has been made. It's just been transferred. Now, what I'm looking for is digital assets that actually do create value, perhaps because they've replaced some part of the financial ecosystem, something that is now being done on paper, something that is now being done by hand, something that is now taking up someone's time and energy that they're not really interested in, and it can free them up to move on to bigger and better things, because all lending can now be decentralized on a smart contract. That is adding value, and that is really making money. That is just getting started in the DeFi space. And Roland and I were talking about this. I'm excited to see that develop, but until it matures, it's really more of a toy than anything else. So.
Yeah, so it seems like you're applying. I mean, your views is about basically applying some of the financial fundamentals about value creation, investing over the digital currency or digital asset space. So that's something that, yeah.
Yeah, well, because the thing with value, a lot of these, economic principles don't change. I mean, if you remember conservation laws from physics, you can't create or destroy matter. I mean, yeah, you can just turn it to energy, but valuations can go up or down. If you have a piece of gold, if I buy it for $500 and I sell it to Roland for $1,000, we haven't created any value. We've just transferred it. On the other hand, if I have a piece of land and I improve it, I fertilize it, I improve the culture there, I help it grow things that were a lot more valuable than before, then real value has been created. And that's true anywhere in economics, whether you're talking about paper assets, whether you're talking about physical assets, whether you're talking about digital assets. And that's why I think Lily was saying this is like the dot-com companies in the 1990s. Right now, a lot of it is still speculation. Anything that's called crypto digital assets, a lot of people get excited and they'll pay any price for it. But later, when the applications get developed and these things really start making money, they start making real economic value, that's when you'll see the Amazon 2020, the Google 2020, when these companies really, really are profitable and they're the center of the financial ecosystems that we use every day.
Very nice. And moving to Roland, having in the fund management space or asset management space of Signum, what do you guys see as a preference of your investors and concerns then?
Let me first come back before I answer that question. Come back to Tariq's views on DeFi and value of crypto assets. I have a slightly different view without going into detail here. I have seen a lot of wealth being created and transferred into real estate, into any other assets by people who went into cryptos earlier, but also people who use the applications out there, in particular in DeFi, to generate yield. And that toy of DeFi is now has now $170 billion locked up as of today. And 14 months ago, it was only $1 billion. So there's a lot of stuff happening there. Yes, it's still very, very small compared to what we know from traditional finance, but it's growing extremely fast. And the number of use cases is growing on a daily basis. So you can generate yield on by using your stable coins. You can provide liquidity to all these DEXs. You can even do it in protective ways. There's lots of use cases out there, and it's happening on a daily basis. So if we look at now from an asset manager's perspective, and also, so we are also a bank, we have a banking license in Switzerland. What is most relevant for institutional investors? What are the preferences or concerns? I think the strongest concern is always the counterparty itself. And we have heard that earlier. Shunyet has mentioned that for them, is also as a market maker, the counterparty is very important who to choose, who to trade with. So our institutional investors expect a strong counterparty with a strong regulatory anchoring. So the bigger your license, the better. And we have seen funds being moved over from, let's say, competitors with lighter or no licenses to the bank or to our asset management.
But Roland, isn't the whole point to eliminate the counterparty? I mean, when you trade on a DEX, do you care anymore who the counterparty is? You know,
when I trade on a DEX, my counterparty is the DEX itself.
But
so
the
if,
DEX
if this DEX is down, or if there's errors in the smart contracts, I have a problem.
Right.
If my MetaMask wallet is down, I have a problem, and it happens all the time. See, you have another counterparty risk.
Well, yeah, I guess you'd call it more of an operational. I mean, technically, what you have is you have a decentralized counterparty, and the counterparty is not a human. The counterparty runs a software, you know, on a series of machines.
But even most of the so-called decentralized applications are not even fully decentralized. So this is also you must take I say it's always important to take a more critical view on things. So at the end, I personally, when I invest into projects, I always invest into those projects where I can still speak to a human being in case something goes wrong, and things go wrong all the time.
You'd rather speak to a human being who can change his mind, or would you rather read source code where you can see exactly how it's going to execute?
Well, I'm not the one who can read the codes, but of course it's good to have access to those who can read the codes and verify that everything is solid. But it's what I'm saying. What I'm saying.
That's about the trust. I mean, whom do you trust most?
I trust the code, because the code's never going to change its mind.
Yeah, but you will be surprised how much trust is needed in the world of trust and blockchain. So the counterparties you deal with, you want to make sure that you deal with trusted counterparties and the human beings behind it.
Right.
In fact, if I may interrupt, I agree with Roland to very much an extent about counterparty, and I think he's pointing to some aspect about not the traditional counterparty as brokers, you know, exchanges and stuff, but it's more of an infrastructure. You know, you could be, you know, the telco networks, the wallet providers, the digital custodian. You know, these are the new. So
correct, Eric, but not limited to that. It's not limited. You say, for example, the lending business in crypto is a huge business, but here it's even more relevant. Who do I borrow with? Who do I lend with? So the balance sheet is also relevant behind it. Yes, I can also do the same things on Aave. I can do it on Compound. But the thing is to see, what do I explain my tax authorities when I get Compound tokens back or Aave tokens back? What do you explain the regulators? So for the time being,
report for them and show it to them. I mean, it's not rocket science. It's a spreadsheet.
Yeah, tell your tax advisor. Explain it to them. What I'm saying is, I think there's still, and there will be. And I see, I'm coming from a world of traditional CCP, and this is where I grew up in. But now I'm doing crypto. I deal with that on a daily basis. I do smart contract selections on a daily basis. I'm very, very happy, but always still when I know the counterparty. And if I put myself in the shoes of an institutional investor, and we see that, of course, our client profiles and our demand from our clients, they want to deal with solid counterparties. Yes, they could custodize, a crypto hedge fund could custodize their Bitcoins, their Ethereums by themselves. But show me any asset manager who also wants to be a custodian and takes the responsibility to maintain a wallet, to keep it safe of clients' money. So this is a completely different responsibility. And you need to, it's not only technology you need to put in place, you need to put governance in place for that as well, and complex processes to keep it safe, right? So this is not the traditional function of an asset manager. So this is why they come to us. They outsource to a professional custodian, which we also are as a bank. So I think there's a couple of aspects. What is important for institutional investors when they deal, when they interact with counterparties in that space. And another aspect is also expertise, right? You want to deal with someone who understands both traditional finance, but also digital assets. And there's still not so many people out there who understand both worlds. Number is growing fast. I'm happy to observe that, but it's still, it's still nascent.
Right. Thanks, Roland. And just because of time, I'd like to quickly move on to the very last exciting part, which is development innovation. So, Lily, you mentioned about product innovation from the exchange perspective. What can you share with us about, you know, what do you have in the future that we can all look forward to?
As I mentioned, this industry is just in 1990s. So every innovation can be happened in the future. Today, maybe I think many people have talked about DeFi. Yeah, it can be something replication the traditional financial world. Everything, less people, more clear, no any issue, you just know everything based on the smart contract. I think DeFi world will still have a very long way to go. Today also, although we have compound, we have lending platform, we have some derivatives, we have options, we have insurance, we have many DeFi projects, but just the beginning. Maybe next few years, 5 to 10 years, DeFi will own most of this world's financial world. I'm not sure when, but maybe in the next future. And also another one should pay attention, metaverse, of course. Recently, GameFi is very, very popular in the market. Many people know XE and also know its community, YGG. Yeah, this means for many and also in recent days the punks, monkeys. So for this new world, many people, they want their own spirit, where it come from, their own icon. So they will use a new word to open this kind, to set up this kind of icon. So they want to set up their own metaverse. They in this world they play GameFi, not other thing, not the traditional games. And they will buy land in this metaverse. They do everything here. Maybe 10 years later, most of people will have their life in this kind of metaverse. They can use AR, VR, everything, every hardware to help them to set up this kind of metaverse. Today, this is just a very beginning. So I think based on the smart contract, many innovation is on the way. I just mentioned very strong to very long ways, but there will be other ones, other new innovation. So I just want to ask everyone to pay more attention to this industry, not take a look at maybe dodges, not very important. Just take at this kind of new innovation. This will come the new world. Yeah.
Thanks, Lily. And to my speakers and audience, I'm afraid we have ran out of time. I know we have a lot of eager questions and that we have answered. But if you can spare me just 30 seconds, I'd like to wrap up what I think the audience and the esteemed speakers have basically shared their insights is. From a regulation standpoint, Shunyet, from your area of proprietary trading environment, it's about integrity of the regulation of the counterparty. From Chenlu, from the family office, you mentioned about because of the complexities for family offices, they are moving overseas to more friendly locations, basically to operate the businesses. From the demand in the virtual asset space, I call it private markets collaboration with the regulation, right? So we talk about, I think Roland mentioned about having frequent communication with the regulators. Tariq mentioned about frameworks that we need to know the framework so that we can operate, the do's and don'ts. And then Lily mentioned about the blockchain. Oh, sorry, and that just was Roland mentioned about blockchain and DLTs that is moving very fast that the regulators may need to be aware of. And then coming down to the last bit about preferences about from an institution standpoint, we all know if you can make money, right? But the concerns are very real. You have custodial, safety, trading, all in one, which Poppy mentioned. Lily has the capability. Tariq, I like what you mentioned about economic substance, right? Creating value. And then Roland having a very unique perspective about counterparty risk, not the traditional way, but in a digital landscape now, which can be very mind-boggling than we never thought of. So these are the takeaways, and I think it gives us a view to what to look for in the next 12 to 24 months. And like what Lily mentioned, Coopy Global is actually pushing forward with a lot of innovation products. Tariq, Roland, I'll be love to catch up with you guys to talk about the DeFi and Shunyet, from a prop trading side. Happy to see what you guys are trading. So with that, I'd like to end this panel. Thank you very much, and I'd like to hand over to Joy for the next event. Thank you, Go.
Yeah, thank
very
you,
much.
Eric.
Thank you.
Yeah,
Thank you.
for moderating the panel. That was really a great session. Lots of sparks and insights. Okay, I'd like to thank Lily, Shunyet, Chen, Tariq, and Roland for sharing your view on the latest development and future outlook of digital asset, derivatives, blockchain, and marketplace from different perspectives. I think it's really a fast evolving new world with many innovations worth exploring further. That brings us to the end of today's sessions. I'd like to thank all our speakers and delegates for participating. Also, a big thank you to all our sponsors, supporting organizations and supporting associations for their support in making this event possible. Thank you again for joining in these 2 days for FOW Asia 2021. Hope you enjoyed the entire event and find it informative. If you have missed any of the sessions, they will be available on demand. Of course, we also welcome your feedback and really look forward to seeing you again in person next year, hopefully. So next, in a few minutes time at 6:30, the Asia Capital Market Awards 2021 ceremony will take place. So stay online to celebrate with the winners. Thank you once again. I don't want to say goodbye for now, but really look forward to seeing you again. Thank you so much for the panel and for all the participants.
Thank you, Joy.
Thank you.
Thank you, everyone.
Thank you.
Thank you.
Thanks.
There.